One, go. All right. Good morning, Tosca. We are live
Morning.
and kicking. All right. So let's give the audience some time to get in.
Yeah,
And we'll go from there. This morning I was thinking that, instead of we're gonna do the workflow process, we're
yeah,
gonna wait for later in the session. And today I wanted to, kind of open it up. I wanted to first and foremost reanalyze yesterday's price action and decision making around that.
yeah,
All right. And then go from there. Um, because like I don't care what any other industry, any other guru or whatever says about hindsight trading. Hindsight trading is one of the best versions of re-engineering previous days or what you got wrong is very very important, right? Re-engineering that well and like to the point where you're making decisions from that, is a very important thing for people to do because like it prepares you to make decisions today, right? So if you re-engineer yesterday, what your thought process was, what your decision making was, like what you missed, what you could
oh
have
yeah,
done better, right? That's gonna impact today because those little, especially when you say it out loud, like
yeah,
especially in a live audience like this, like I'm gonna think about what we talked about today, what we talked about from yesterday. I'm gonna think about those decision points today, right? And it's something that I encourage each and every person to do. Like it's like if you rehearse for a speech, if you rehearse for anything, like you do it in front of a mirror, looking at yourself, saying it out loud. If you think
yeah,
it, yes, there's power to thinking and like what am I gonna say? What am I gonna do? But I personally believe that there's more power in me actually going in and reteaching it and, revisiting it myself because that's how my mind works. So the biggest thing for the audience is they need to re-engineer. You don't have to get all fancy with that. It has to be realistic, right? It has to be a
yeah,
realistic goal. Kind of like people who go on diets, right? Like they go on these massive extreme diets, right? When you journal, it doesn't have to be this big ordeal that's exhausting to do. Just like a diet, right? It has to be realistic and tailored to your
yeah,
lifestyle. And it can't be this huge thing that, yeah, it's cool for the first week of doing it, but it's not scalable or sustainable.
yeah,
Same thing with journaling. Like it needs to be quick, easy, and to the point,
yeah.
and you don't have to write out a 8-page essay on it. It just needs to be something to capture, that day's action,
For
so
for
you
me,
can, yeah,
so I was just going to say I think that's absolutely on the journaling because when I first started journaling, which was quite some time ago, it was always like sort of uh, war and peace, too much, right? Overkill,
mhm.
too much detail. But over time, I've kind of realized that there are certain things which are more important than others, right? So you can be more concise and more realistic, as you say, with it.
Yeah,
Yeah, yesterday was a mess up for me, by the way, around about where you are. So this is going to be really good.
yeah.
So
So it was actually a mess up for me as well, right? I made my capital anyway, but I definitely missed a lot of the move.
yeah,
But I chose to miss the move. Well, I missed part of the move because I just didn't see the move, but then I missed the rest of the move because I just didn't, you know, make the
uh,
choice to see the move, right?
yeah,
And right, and I'm not afraid to admit that because it's who I am, right? So if we look, let me turn some of this off. Need all that. So this should be Thursday. Say Thursday? No, yesterday was
yesterday was
Thursday.
Thursday. Thursday, yeah,
Okay, I lose track of my days hardcore. All right, so we know, and this isn't anything new. It's something that we put out in the space, right? We know that from 1930 to 2030, right, on the 15-minute chart, which is 1 on this white chart, right?
Hmm.
We can, if we extend away from it, there's a high probability that brings us back to it,
Yeah.
right? So during our morning session, right, we had still not hit the other side of that initial balance, so DR, ADR,
Mm-hmm.
right? Auction theory people will call it initial balance. DR calls
Yeah.
it ADR. ICT community calls it the Asia kill zone, right? Just to get the viewers, understanding what I'm saying. All right. So we knew that there was a high probability that we would continue to come up here, right?
Yeah.
We also know that at 8 o'clock, I want to rewind to 8 o'clock. All right. At 8 o'clock on the live price thing, we're in a confirmed trend, right? So
Yeah.
the
Yeah.
reversal happened right here, right? We got above previous hour midpoint. We got above
Yeah.
the current hour 5-9 box. We stepped above it and found support, started the new hour, stepped above, developed this 5-9 box for the 5 o'clock hour, stepped
Mm.
above it, lost it, but found,
Yeah.
the previous hour mid, couldn't get below it, right? Then this hour, 6 o'clock, we step above it, find support on it, and go, right? This hour, we can't even come close to the previous hour mid. We step above, find support, go, right? This hour, which is opening up right now, we're below the previous this 8 o'clock 5-9 box, and we're going to test the mid, right?
Yeah.
On the data chart, we see that there's a 52% probability of us getting to the 2008 or 20,008. We see that
Yeah.
there's a 36% probability of us going to the 20,048, right? And then there is a 23% probability of us getting up to the 20,105.70, right?
Yeah.
Right? And we can see that we already hit this probability, and now we have this 65% probability from 8 to 12, 57, 8 to 12, 75, 8 to 12, all day 41 right
Mm.
here, and
Yeah.
all day
Yeah.
46 right here,
Yeah.
right? So we know that this is the next all day probability, and it is what it is.
Yeah.
A mistake I made yesterday, which one of your friends actually reached out to me, and like brought it to my attention, which made perfect sense.
Yeah.
Hand pink wave. Why do people keep saying hand pink waves? Is that like an emoji? Like now Stoic Capital is doing it. But anywho, we at this point we had met the statistic that said we were going to take out the other side of Asia after pulling away from it, and it looked like it wasn't just going to be take out Asia's and go lower. It was going to be momentum up, right? The mistake I made was when I filtered the Asia in the London variables, right? I just looked at what the highest probable variable was. I did
Yeah.
not count up the percentage of us dipping back into the London range, which had an actual bigger variable, right? If
Yeah.
we put London on here, right? I had it coming back in, but being I had it being coming back into it, but at the bottom of it, but
Yeah.
did not incorporate the statistics saying that we would engulf from 9:30 to 10:30
Yeah.
both sides of London, right? And why that should have been done
Yeah.
is because of this probability right here, right?
I think it was something like 63% gravity on it, potential to
Hmm.
pull it back, something like that.
Yeah.
Yeah.
So, and then we also knew that it was foggy from 10:30 on. Like statistics was it could have went either way, which is why I caution you guys to pay attention to the midpoint of the 9:30 to
Mm.
10:30
Yeah.
range and pay attention to the momentum that
Yeah.
it was dragging you towards, right? So now we're gonna go forward a little bit on the 1 minute, right? So I'm gonna click on this chart, and right now, so at 8:08, we're starting to see the gravity get pulled
Yeah.
to this midnight price, right? Because we know
Yeah.
that it has a 75%, and so now we're below previous hour mid, we're below our current 5-9 box, and now we're expecting a reversal. So there's no trade to be had right here. Besides, like if you're doing Austin's midnight snap, he would have taken a short on
Yeah.
this red bull right, or this red wolf right
There.
there. That would have been a
Yeah.
short for 25 handles taken, and it was a success, right? And then we're still trying to identify the market condition. News comes out right there.
Yeah.
We see a complete rejection, right, off of whatever level this is. It doesn't matter because we didn't have it marked up, but we can say that this right here was a level that mattered because they bid it right up,
Yeah.
right? So now we're going
Absolutely.
back to the cycle. Are we above previous hour midpoint? Are we above or below the 5-9 box? All right, now we're about to start a new hour, the 9 o'clock hour. Are we above the previous hour midpoint, which is right here? And then we let the 5-9 box form.
There.
Stepped over it. Now we're seeing if we find support on it. We find support on it, right? So now this was just noise to us, right?
Yeah.
Like there was nothing here for like the market condition, right? It showed the possibility of a reversal, but the next hour rejected that possibility,
Yeah.
right? So if it's not clean and if it's not obvious, it's not a trade to be had, right? We just
Yeah.
know that we're above that midnight and there's a lot of probabilities pulling us down to this midnight, right? And then we know that 8:45 all the way to this 6 o'clock candle. There is, yeah. If you guys have questions, like we're just doing a recap review,
Yeah.
and then listen, if you guys are talking about, I keep getting okay. Fine. Okay, so like the indicators, this indicator for the previous hour, the hourly box and the 5-9, and then minute 9 30-second opening range. I'm trying to figure out the best way to give it the Substack users where they can just have access to it. And right now it's looking like it's going to be a free WAP link, and then I have to put everybody's email in. So I'm still working those details, and then my buddy TFO is finishing up the last bit of you know the code for the vet, which is this one right here. All right. So right now the clues right now is that we're finding support on the 5-9 box and we're above previous hour midpoint. We have a 52% probability right here, right? And then we lose the 5-9 box.
Mm.
However, there's still no trade to be had because what is it Tevin finding
We're above.
support on right there? Exactly. And now we're stepping back over,
Although, yeah.
finding support. And when you see this kind of stuff where it's not obvious, you sit on your daggone hands. You don't take trades. I can get if you took this trade right here.
I did.
right? But then it went up because this looks like it stepped above and found
Mm.
support, went massively up. But then the clue was it came right back down within the next minute, and then we lost it. And so, like, the moment
Yeah.
this nonsense happens, you're sitting on your hands. Unless you're like Stoic Capital, Mr. 930, or even myself, where we see what's happening here. But it took us years to get that way, and I
Yeah.
don't expect any of my you like any new traders to understand what's happening here, right? Anyway, then we lose it, and we go back and forth. We're still finding support on the previous hour mid, so we have no trade based off of this market condition. It could go either way, right?
Mm.
The only difference is we have probabilities that can drag this down. We already met this probability, so now what we're seeing is rejection from this level, right? Because remember, the more time we spend above a level tells us it's accepting that level, right?
Yeah.
So the fact that we're rejecting this level, right, is giving you a market clue,
Yes.
right? Just like we talked about yesterday with the previous month
Mm.
50%.
Yeah.
It's a clue, right? We met the criteria of closing above it, but then we instantly rejected it,
Yes.
right? So these are the times when it's nice and confusing when you just sit on your hands and you let it give you more information. Because there's two types of risk a trader faces. There's data risk and there's price risk, right? When price is
Okay.
going up, right? Right?
Yeah.
Right here, right? I just have random structure drawn out, right?
Yeah.
For me to be a buyer right here, right? I'm at price risk. I'm at a very price risk area to be a buyer. If I was a seller, I would not be having price risk. I'd be having data risk, right? Meaning I have not got the confirmation that sellers, like, let's say this is a statistical probability right here,
Yes.
and right, we get up to that level and we expect a reversal, or let's say it's the time of day, 8 o'clock,
Yeah.
right? Right? Right now, buyers have price risk. If you're buying at this level, you have price risk of this dropping, and you are buying in premium, right?
Mm.
Sellers have data risk, meaning there's not enough data to confirm this decision to sell this level. Now, if it was right there, sellers would have price risk and buyers would have data risk, right? So you're always juggling where you're at, right? And this is one of the main reasons I use statistics 100% of my process because I understand the relationship of price risk and data risk, and I don't like playing that game, right? I do wait for like a ketosis. Like let's say this is
Mm.
midnight price and this is 8 o'clock, like Austin Clark and the Pack Trade Group, how we trade this, right? Yes, we wait for the right ketosis to happen in the market before we enter the sell, and then we target our 25 handles and go from there,
Yeah.
right? From there, we have statistical edge, right? That beats price and data risk. We know we don't have data risk, even if we sell right here. Why? Because we have we have mitigated that data risk with a statistical edge that incorporates a probability of a price level that is anchored by a time. All right, so going back to this. So we hit the highest upside target that was left on the table. We still have 36. We still have 23 in case we wanted to get jiggy with it.
Yeah.
Right? But right now, this means nothing to us. This is the kind of stuff that people always complain about. Like, the price action was horrible. No, you just don't have a proper way of reading the price action from a statistical measurement. Because remember what we talked about. We said yesterday that there's a higher probability of us coming down and then opening up like this.
Yeah.
8:30 would bring us down, and then 9:30. Well, we got it completely wrong. We
Absolutely.
never breached back down. We kept going up. So now that doesn't mean because it didn't do the exact timing that we wanted that these probabilities were neglected and are no longer valid. Because these probabilities definitely are more valid and than anything else, right? So now, still playing around the previous hour midpoint, still playing around the 5-9 box until this point right here.
Yeah. Yeah.
Now we got a clean break of previous hour mid and that 5-9 box. So now we know that it's time to expect a reversal, right? And one thing I'll ask you is when, remember I talked about the risk profile needs to align with the market condition, right?
Yeah.
So if we're expecting a reversal, how should my risk profile look? Should I be, let's say I have to engage 10.
So you'd be DCAing on in this situation if you're looking at some kind of reversal.
Bob R., are you the one that reached out to me and connected me with some dude that was another Army vet on Discord? But yeah, you would be DCAing into reversible. What does that look like? If I have to engage 10 micros, right? How
I
would I do that?
so you'd be for me it's two, um, and I'd go from there depending on what you count. If it's up to 10, and then I think it would be I would look to if I am DCing, obviously in a loss situation or a losing situation rather, at some kind of specific level. So perhaps here, if I do shoot one here, if price is returning back up to either the mid of the current box or the 5-9 box, potentially adding in those
Hmm.
spots.
You could. Now we're going to take this for granted. We know we have all these probabilities
Mm,
from 65 down that need to be met still, right? We're going to say we're just chasers, right? So we're just going to sell right here. We're not going to wait for wolf entry. We're not going to wait for a retest of the 5-9 box. We're not going to wait for the next hour to open up and retest previous hour midpoint. We're just going to sell right here,
two, yeah,
right? 2 micros.
yeah,
And like I told you guys, I like to give myself an allowance. If it's a 50K, it's up here because I personally stop myself out if I don't like what I'm seeing, right? So we chase. So we completely have price risk, but we don't have data risk, right?
yeah.
So now new hours opening in the next 2 minutes, right? And we're at that
Mm,
midpoint, which once 10 o'clock hits, this is the previous hour midpoint, right? And we're expecting a reversal, right?
yes,
But the problem is live price is telling you not yet, right? This 8 hour has to be below previous hour and 5-9 box, right? To confirm that, that means this 10 o'clock hour needs to be below this hour, and we need to get below the 5-9 box and step up and find support or whatever it's called. All right, so next hour opens up below the previous hour midpoint. Well, that's not it. Now we open up below the previous
mm,
hour midpoint. Now we're forming the 5-9 box, and now we're below the previous hour. So now we have the market clue right here. We open below the previous hour midpoint, and we're forming the 5-9
box
box,
below.
right? And we know that these probabilities are the magnet that is pulling towards.
Yeah.
All right, 5-9 box is formed and it's pretty big. So now we're either looking for now this is confirmed the reversal, and now we're trading towards a trend, right? So now if we're going to if we're going to trade towards a trend, we have three areas where we can sell more at. Right there, right there, or right here, where this minute 9 30-second opening range is, or anywhere. We'll just say the low of the 5-9
Yeah.
box to keep it simple.
What's that middle line?
Huh?
What's the middle line referring to?
This?
Yes. Yes.
The midline of the 5-9 box.
Ah, okay. Okay, good. Yeah.
Right? So for me, let's say we're chasers some more. We like to chase into the trend. We don't like to sell. Like we like to take on that price risk head first, right? Because we know that we're in a trending market, right? That time it would have worked out for us, and we continue heading lower, right? So new hour is about to open up. Remember, I told you have all day, all day to get into those 10 micros. Your job is to sit here and to understand the market condition and what statistics is pulling towards, right? Now we've met these three statistics,
Yeah.
right? And we're in a trending market, right? In this hour, the 11 o'clock hour is going to confirm if we're still in that trending market or if we're in a ranging market, right? But this doesn't look like a ranging market. This looks like a trending market. Remember,
Yeah.
we looked at the previous day and the way the hourly mids lined up right here. Looks like even though we had this huge move back down and up, like the mids look like just a range, right? And we spend the rest of the day doing a wider range style trading.
Yeah.
So we still have that thing to consider, right? So new hours opening up in 2 minutes. 1, 2, right? We're below previous hour midpoint, and we're going to see where the 5-9 box develops in relationship to that. All right. So now we see the 5-9 box is developed, and it developed below previous hour mid, and now we're below the 5-9 box, right? So that's confirming the trend, right? So our job is to continue selling our contracts
Up to 10.
up to 10 like this, because now we have confirmed trend. For me, at this point, I take profit, right? Because I have this probability down here that I was shooting towards, and we already met my daily statistical draws, right?
Yeah.
So for me, it was about, like I don't have probabilities coming down here, right? And we're reaching the extremes, and like I got weekends, right? I didn't even leave a runner on, right?
Yeah.
And so now, and I was expecting, oh yeah, right here, right? I was expecting a possible reversal because if it's going to reverse, this is the highest. The 11 o'clock
The clock.
to 11:30 is the highest reversal time, right, for this initial balance or the RDRs for the DR traders or the New York opening, like the 9:30
Yeah.
to 10:30, right?
Yeah.
So that's how I broke my rules yesterday. You can see, I don't know why this isn't picking up minute 9.
Is it in the settings?
Oh, the set to minute end at minute 9. Like, I don't get that. Maybe I have to. Have I been doing the wrong? Wait, what time is this? This is 11 o'clock.
11:10.
Bitch. So I was like, why is it not picking up the 30-second opening range for the 9 minute? Right?
I'll just, yeah, check mine.
I'm trying to get one person to code this whole system, the hourly box with the 5-9 with the 30-second opening range for minute 9. I haven't found somebody to do that yet. All
I
right,
might know someone.
that'd be cool. But we're still continuing trend, right? So our job is to rush into those cells, right? We're not even gonna wait for the retest of anything. We're just gonna rush in and chase the price, right? We're still in this trend, right? We can't get above previous hour midpoint, and we can't get above the 5-9 current hours 5-9 box. So we're still in a trending market condition, right? Which is why I made the mistake yesterday. And then we drop. And we continue to drop. And look, this is why I tell you these daily analysis that we use on this screen, these are the weather channels. So even though we're reaching the low of the day zone right here, right? I'm not just buying this blindly, right? Like, what is live price telling me? It's telling me we're in a clear
Yeah.
trend using previous hour midpoint. I also know somebody that can do that this weekend. That'd be great, Jerry G. I like to use Jerry for everything because that's my buddy.
Hey, Jerry.
He's pretty much my grandfather. Okay, we can call him my dad. All right. So, like, even though we have completely wiped this out, we're approaching this probability and this low of the day zone from a statistical manner. The hourly boxes in the 5-9 are telling you you're still in the trend, idiot. Do not exit your shorts and stop thinking about buys. That's literally why I built this system the way I did, so I could align live price with historical probabilities.
Can I just say, it,
That, that
so
is a that is an honor, Jerry. That is an honor for me to call you that. Those are not fighting words. You kidding me? What are you
my,
saying?
my no, I was just going to say my mistake yesterday is that I didn't handle being caught the wrong side of that and didn't react quick enough.
Mm-hmm.
And it was silly really because I
You had
took
all
into
these
account.
minutes to just sit here and look at it, right? Yeah, I know that pain,
Mm,
dude. I know that pain.
yeah, yeah.
I still deal with that pain on a daily basis. My biggest thing is to like stop hyper scalping the 930, right? Like because it really messes up my
It is what it is. I got. I learned
yeah.
two lessons yesterday, but I froze, Nikki. That was my big problem because on the one side I was short. I got
Mm-hmm.
stopped, but my limit to get me out of the short trade triggered another short without me
Did that
realizing
have
because I was
did that happen at the 9 o'clock
yeah
hour?
yeah yeah
Okay,
yeah
let me
yeah
give you a word of advice. Anytime the market is confusing and we're swiping between the 5-9 box back and forth,
yeah
they're shaking people out. They're confusing everybody. Everybody is getting confused. Everybody is getting confused, right? So your job is to not even give two shits about trading. Your
yeah
job is to wait for the obvious.
yeah
Your job is to wait until it's so daggone obvious, like it was on this previous hour mid, on the rejection of this 5-9 box, on the rejection of this previous hour mid, on the rejection of this 5-9 box, and now we're at this point. You see how these are way more obvious? Like,
yeah.
listen, me, you, and Jerry, like, we don't need this kind of stress in our life. If it seems stressful and confusing and we're not to a tick rejecting the 5-9 box and was just swiping back and forth, that means shut your mouth, walk away, and wait for the next hour. It's better just to wait for the next hour than to engage with this nonsense. This is nonsense. This is what little kids engage in because they're too dumb to realize that, dude, give it time for the obvious to play out. Because every day the obvious plays out. Your job is to wait for the obvious
Yeah.
and not to engage with price like this. And the fact that it was swiping back and forth, those 5-9 boxes told you just wait, right? You've got the rest of the day to just take a trade.
That's really good advice.
So now, 12 o'clock. So as the days, as the hours, every single minute that goes by in the day after 9:30, the likelihood of a reversal drops in probabilities, right? The highest reversal probability for the day is the 12 o'clock hour, right? So now, when that 12 o'clock hour, we can expect a reversal. If it's going to happen, it's going to happen within this hour, right? Well, I mean, it's the relationship between the 12 o'clock and 1300 hour, right?
Okay.
But now we're paying attention. We're above the 5-9 box, so that's a check on, that's a X on our trade. But we're testing the previous hour midpoint,
Yeah.
right? Now we're paying attention. Up. Now it's probably time to take the trade off, right? It's that simple, right? I missed
Yeah.
the
Yeah.
reversal. There's a level right here, right? It's happening. Like something's happening. If this continues lower, I don't care. I don't
No,
care,
you've earned.
right? A place I've traded for 2 hours, I'm done, right? I'm not trying to buy this because the buy, yes, this is above 5-9 box, and yes, this is above previous hour mid, but we're starting a new 30-minute. And remember what I told you about new 30 minutes? Is if this is a 30-minute candle, one side of these wicks are going to be false. So my job is to pay attention to this 5-9 box for this 30 minutes and sit here and think, which one's the false wick, right?
Yeah, that gets answered.
All right, that gets answered right here. And look at this. We're about to
Mm.
open up a new hour, and where are we? We're in the relationship of this hour's midpoint.
Hello.
I'm late. Start over. All right. This is a phenomenon that I really like paying attention to. Is like when the new hours open, how close they are to the new hour. How close in relationship is it to the previous hour midpoint? Right. And
Whoosh.
boom. That's okay. Right. This is okay. You got out of your trade. Who cares? Like you
Yeah.
followed your rules. This is like it does not matter, right? Because guess what? My business plan for trading this style account told me you got to go, bro. Like you got to go. It's done. Who cares? Move on. All right. So with that being said, we already know how the rest of the day played out.
Yeah.
Right at this point, like just follow the continuation of trend. Right. Previous hour midpoint, 5-9 box. Previous hour midpoint, 5-9 box, et cetera, right? All right. So what questions do we have? We just synchronized how we trade live price around these statistics that we do every day. And let me just stop right there. What questions do we have on the SLP?
Okay. I guess what overarching question I would have in terms of of putting that out to the community, would it be easier? Okay, so the format I've gone for is steps, but I feel that maybe I might now have too many steps whereas I think perhaps I could break it down to specifics, right? So I'm just going to go through what these are, and whether you agree with me or not, you will say. So we look at NFP, we look at EMA, we do some situational awareness,
Go
and
into
the
the
description.
situational awareness. What does that mean?
So situational awareness is where are we in terms of weekday overall look when I look at my EMA, the way that the last few days would have been. Are we in some kind of daily trend? Has there been a break of the previous day's high low, and where are we in relation to that mid? So those sorts of things.
Okay.
And I'd also perhaps look at or consider what week are we within the month, because I know you've talked about the way week 3 and week 4 can behave depending on what week 1 and week 2 have done. So
Mm-hmm.
it's those sorts of things. And at the moment, I have that in actually 2 rows because this is a spreadsheet format. I find it easier. So it's like step number, description, what am I looking, or what are we looking for, and the reason why we're looking for it, and any further work that might be required in that. So if we're happy with that, then I can group that situational awareness. Then we look at Asia. And particularly, I want to know the confirmation direction, potentially any exhaustion areas where we may have extended to. Where are we right now in terms of price with relation to Asia? We know there are stats and probabilities on returning to the mid and to the opposite side of Asia itself. So it would be good to know how that's gone. Are we false? Are we broken the mid? These kinds of things. And actually, that's collecting some data that we're going to use later as well to feed into our databases for our probabilities that we're going to be pulling out of that, which are our projection probabilities, and later on what New York might be telling us. Then I have, for me, and I have done some code on this. I know there's the indicators, but I have code, Python code, reading that from Y Finance at the moment. That's giving me daily ranges and giving the average daily ranges, that is, and also pulling out stuff for what Asia, London, and New York look like in terms of their average initial balance ranges, right? So there's
Mm-hmm.
2 sets of things there, which I'll be looking at that. At that moment in time, I'm just dropping that onto the chart. I'm not necessarily positioning them apart from perhaps the Asia, which would be which we'd know. Then I look at London. I'm very much in the same way that I look at Asia. I'm extracting some data out of that. So direction. I'm at this point. I'm really interested in what it's done now in relation to Asia, right? Specifically in terms of time and the midpoint of Asia. So did it break? When did it break? How's London looking in terms of its true? Is it still true? In other words, non-false. Again, that information is extracted, and at this moment in time, we will start having a look at how New York is going to be in terms of what their expectations on where that box might appear, and what the likely direction is, or what a probable direction is in terms of that after that box formation, right?
Mm-hmm.
So I guess up until that point, um, do you feel that I'm missing anything? I know that I
Did you
one or
talk
two
about
other
the
things.
projections?
So the
I mean,
projections,
the time-based probabilities,
that
projection-based,
that
structure-based.
that's next.
Okay.
So yeah, okay. So let's move on to that then. So obviously, I want to be projecting probabilities onto the chart, and what I should have gleaned from my situational awareness is where specific structures are. In terms of previous day mid, perhaps the extremes of the previous day. And obviously, that's nuanced and depends on how one is weighing up to the other. But because it's structure, it kind of should be fairly obvious.
Mm.
Then I look at our times. So the 1800, the 1615, the midnight open. One thing personally I've started to explore is specific time candles around 2:30. I'm quite interested in what
Kind of
that
like
is
you do
like.
that, kind of like you do that 6:30 candle and all that. Yeah.
Yeah, I'm actually I played around with that quite a bit, and I was quite I was smiling, put it that way. Um,
I think
at the
I know that
sorry,
we talked about that 6:30 candle like a year ago, and
yeah,
like it's fascinating the relationship that has, especially
yeah.
earlier in the morning.
Well, this is it, right? And but
Hmm.
and that's for me that was the flip, Nikki, because prior to that, I'd never even considered, some kind of reversion back to that. It was always about projecting off it.
Hmm.
But this additional um, data point, right, is quite enlightening because
Well, yeah, like let's look at this chart because like everybody wants to see the expansion. Everybody's chasing that
yeah,
expansion. If
yeah,
90%, like Austin Clark says it the best, right? If 90% are chasing the expansion and 90% of the people are failing at this, what should I be doing? The complete opposite, right? To find success, right? And
yeah,
so if we look, the markets don't just move up in a straight line. Like these blue boxes are London, red boxes are New York, yellow boxes are Asia, right? We look, right? This trend and this trend, and then this reverts, and this trend up
mm,
was met with this reversion down. This
mm.
trend down was met with this reversion up, right? This trend, we don't know what's coming, but like reversion, 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 right?
This is it.
Trend, right? We don't know trend, reversion, 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 right? Trend, right? Oh, is this a trend or is it a reversion of this movement, right? Up, then down, then up, right? Down, then up, right? And so forth, right? So, like, we can't put a probability on an extension in direction, right? But we can put probabilities on reversions.
That's a really good way of putting it, actually.
So, why am I out there chasing extensions when I can just chase something with the actual statistical probability, right?
100%.
But yeah.
So yeah, I mean, so it was interesting for me just to actually drop that in and see. And sometimes, it might be close to our 1615 or our 1800 or our midnight times, right?
Hmm.
And therefore, it's kind of like a bit of weight, especially if our probability in terms of percentages are ballpark. So I find that quite interesting.
And
And of
one thing
course,
I'm
then,
working on right now is how to identify the characteristics of these trend days, right? And like when you don't see certain reversion points met throughout the day, or if you met certain extensions higher of those reversions, how to use that as a trigger to say, don't trade the reversion today, right? Like this one never even came close back to Asia, never
mm,
came close
mm,
back to London, and New York looked like it wanted to, but it did it at the wrong time of the day, and not
mm,
those high reversion times of the day that is supposed to happen. Like this one reverted enough, and then it trended down, right? Like so, that's one thing that I encourage the viewers. Like this one couldn't get back to Asia during the right time of the day, couldn't get back to London during the right time of the day, and so you need to. Like the time of the day is probably one of the most statistical edges out there of when
yeah,
to expect these reversions, and
I
the
think,
only people out there talking about it is Austin Clark. And it's like, guys, like
yeah.
us army people can't be the only ones that have the data and understand, like this. And it just blows my mind. But that's what I'm working on now. So right, we're starting to meet the criteria of a possible trend day up because certain reversions aren't happening and we're extending far away right now.
Yeah.
But yeah, like, all right, what questions does the chat have? Because we're not doing our morning projections yet. We're just kind of doing this as a teaching Friday and like answer the questions Friday. Okay.
What
Like,
have we
what
got?
questions do you guys have that you want me to go over? I mean, Costa to go over that we do every single day. Bowie's in the house. Good morning, Bowie.
I think this guy might have one.
Give me a second. All right.
I haven't
I don't
got
see a
anything.
question. Do you see a question?
No, so my mate who I think I'll try and do that. Hopefully, I'm doing this justice. Um, that you exchanged a message with yesterday evening. One of the things that he looked at on a database is that there is levels around start of session. So where a session may open. I'm just wondering, is that something? Okay, let me rephrase it. Is that something that you've looked at, Mickey,
Are you
at
referring to the
all?
question, the thing that he brought up to my attention?
Well, I'm not sure what the question was, but when I spoke
Yeah, let me
about
pull
it,
it up.
which okay,
And I'll show you this. Let me drag this over. So from his database,
yeah,
right,
okay,
and the
yeah,
variables that we had, right, that we measured, like I was seeing this 37% right
yeah,
here,
yeah,
right, in relationship to the London. However, if you add up the 3% here, the 6% here, the 6% here, the 10% here, the 10% here, and the 24% for a range X, right, there was more likelihood that we did dip into that
into London.
yeah, into London, which I did project that. Right, because I saw that. I just didn't communicate it because like right here is what do I have on? Oh yeah, I got this on. It shows RTH gap. Right, so this is London. This is where my New York was projected to be at, but I just had it on the low end of London.
Yeah,
But I was saying the highest probability was here, but I thought I said like we were going to move it down into London's range to account for these probabilities right here,
mm,
but I did not because he brought it up to my attention, and it was really good comment. All right, so my entry question was a high level question, not an end all be all. Just trying to understand
5-9.
your 5-9 with hour halfback rules. It's simple, right? Like I just use these hours to understand what market condition I'm in. Am I in a trend? Am I in a reversion? Am I in a range? Right? If these midlines are lining up like such, right, I'm in a range. If the 5-9 boxes are going up and then down and then up and then down like this, I'm in a range, right? And so the type of trader I need to be is a range style trader, meaning if my higher time frame probability is the upside, but I'm stuck in this range, my job is to find the low point and to find a low hanging fruit high point to sell. So my job is to buy here in this area and to sell in this area, right? Because I'm in a range. That's this market condition,
Yeah,
right? And like when you see price swiping back and forth these 5-9 boxes like it's doing, that's another indication and not respecting it whatsoever, right? Then I expect and then so the 5-9 boxes being tightly together, the mids being tightly together, or the 5-9 boxes, one being down here, one being up here, one being down there, we're in a range. So
yeah,
I need to in my mind say I'm not DCAing into a loser. I mean, into a reversal. I'm not DCAing into a trend. I'm shooting them all at once at a local area low and targeting 10 handles or 5 handles of the top side. If I'm in a trend, right, like I am here, like we're in a trend right now. Why? Because we rejected this previous hour midpoint. We stepped over the 5-9 box, found support on it, right? So we can expect trend-like material.
Got a question? This is off Jeremy. Do you ever consider the average daily range to take profits when in a trend trade instead of the break of the previous hour mid, I suspect?
I have, but the problem with average daily ranges, like we're actually going through this right now, right? Where the average daily range got manipulated by August 5th and that week. So all the average daily ranges are a lot bigger.
Yeah,
And now we're in that slowdown period where, like, if I'm targeting the average daily range, right, it's still 400 handles, 300 handles, and we're having 250 handle moves, 100 handle moves for the last this week alone, right? Yesterday was the only one that actually met the criteria of the average daily range. So that is, I like the ATR function of that, right? However, like when you have an anomaly move, like we did the first week of August, the weeks after, it kind of your average daily ranges and all your ranges get skewed, and you're sitting
yeah,
there chasing your tail. What kind of market are we in? Are we respecting that high volatility range scenario where we did the first week and the led it halfway into the second week of August, or are we slowing down like we've done this week?
yeah,
Because I have done research on that.
yeah. I think that answers it. I've got no response, so you can see that in that code that I wrote actually, because I look at the
Mm-hmm.
previous ones, I printed them out, and you can kind of see that the sort of initial expansion and then the contraction of what that range has been. Although actually I should have that there. 1
So
second.
right now, we know that we're in a trend, and so if this steps above and finds support on, you continue having expectations to the upside. It had no, you have no business selling this at this point of the market. Listen, the guys who try to snipe the tops, they get smoked a lot. And that's the part that you don't see is they get smoked a lot. And right now, right, we have look at the DR community, right? They have all the data right now to see the probabilities of the expansion right here, right? And
Yeah,
like, do you think they're selling this right now? No, their data is telling them you haven't breached this line in the sand right here. You've already surpassed the false day statistics for the London session. Like, you're not selling shit. You're dumbass if you're selling into this, right? All we're doing is we're aligning a live price portion of it with it, right? Because remember, this drop right here, this is a normal drop, right? And even though statistics right now are telling us that these probabilities have a higher probability, have probabilities like all these probabilities of return are high probabilities. However, the overall session statistics and the signatures of what the session has is doing is telling you not the reverse yet because it's not the right time of the day and we haven't hit the right statistical,
hmm.
area to the upside yet. Handles are actual points. 4 ticks is
1
one
sec.
handle. I have no idea. Like I don't like I use percentages or standard deviations. I don't know. And to round out the boomer lingo, cars are contracts. I got 10 cars going for 10 handles. All right. If there is no more questions, I'm gonna end the chat and see you guys Monday. And then me and Jerry, we need to work on getting. So Costa will send me the SOP for the statistical review, and I'll review it and improve it, and then I'll publish it in the Substack. And then me and Jerry need to sit down and figure out this indicator thing and how we're going to give the Substack members access to it. All right, guys, have a great day. Remember, you got Jackson Hole today. Hopefully, he doesn't fall in the actual hole. How do we get access to the indicator? You join my Substack, and I will which is $8 a month. So if you cry about it, cry about it. I don't care. You join my Substack, you get access to it, and even my Substack members don't even have access to it right now because we're trying to figure out the most automated system to get the Substack members access to it without me having to sit here and inject names into TradingView script every day. So you're just gonna have to be patient for now. It's probably best that you do it manually, right? It builds those neural pathways in the brain. All right. Other than that, I got nothing. Costa, send me the SLP so I can review, approve, and publish, and we'll go from there. All right.
Yeah, can you give me another 6 hours on that? You'll have it at the end of today.
Yeah, dude. We got the rest of our lives. Jazz Waz. I promise you, we are working on that right now. So don't
I,
worry. Just be patient.
I obviously I read the Substack every day, and if that thing isn't worth what it is you charge for it, I don't know what it is because
Thank you.
it's more than worth it. And brilliant work, Mickey. Brilliant work.
Thanks, man. Like I said, the indicator is a byproduct and a derivative of that, right?
Yeah.
Like the viewers are paying for the statistical probabilities and my views on institutions and how they're moving,
Hmm.
right? The indicator is just like a bonus, like the
Yeah.
icing on the cake, right? I noticed this with the 930 room when I was running it, and I'm noticing it now with the Substack. The moment you freaking mention indicators, like people choose the lazy wrong over the hard right. Right? I want you guys all to realize how big players used to make money. They used to make money off of the weekly newspaper way back in the day. They didn't have no
Mm.
indicators. They didn't have no charts. Your job is to analyze the markets for what they are and then collect the data for them. Collect the data to support your thesis of where the market is. And then align that with live price. But I feel like I'm rambling at this point, so I am going to jump off. I don't. Yes, thanks to this subsect, I don't trade NQ, but it is well worth the read. Hey, Bob R, like I use NQ because it's a wild child of the indices, right? Apply it like when I talk about volatility, when I talk about like what the indices are doing, like that applies across the board, right? And then once I get the framework set up correctly, I'll be doing crude oil and gold as well, right? Um, so that's to come in the future. All right,
Excellent.
later, guys and gals.